This program is powered by thevirtual.show, making your offline events virtual. Ladies and gentlemen, the host of WEBIT Virtual, Dr. Plamen Russev.
And hello to WEBIT Virtual on Fintech. What a wonderful week ahead of us. Talking about one of the most dynamically developing parts and verticals of the digital and innovation ecosystems, and at the same time, disrupting time for the whole industry due to the push that we have seen and that we still see because of COVID, as working as a catalyst for the major changes that we see in the future. I will start with my very provocative question for all of you, wonderful WEBIT community from all around the world. I've just received the statistics that we have 123 countries with us. I see over 7,000 people with us live. That's a wonderful start of the FinTech week here at WEBIT Virtual. My question for you today is, are the banknotes in the past? So let's see what the WEBIT community thinks, if the banknotes are going to make their way to the future or not. And let's not talk about, now you see the question already on your screens. All of you, regardless where you're watching WEBIT, don't forget that the interactive model is only on virtual.webit.org. If you would like to interact with us, you need to come to virtual.webit.org, regardless if you're watching on Facebook, LinkedIn, or whatever virtual platform you're watching this content. Very challenging and very exciting times for the fintech industry. Of course, we shall be talking about how we move next, what are the biggest challenges in front of the industry. You bet we're going to be talking about crypto. You bet we're going to be talking about cybersecurity and how we are going to make sure that we protect the means of exchange of value. But let's go step by step. Let me introduce you my first guest here in the studio now.
Bassim Haidar is the founder and CEO of Channel VAS. Mr. Haidar has 30 years of experience in various sectors of the African market and has become one of the most successful pioneers in his industry. Channel VAS is currently reaching over 700 million customers in more than 30 countries in 4 continents, lending over $8 million daily with emphasis on emerging markets, offering financial inclusion to all, and allowing users in undeserved areas to bank more effectively.
Welcome, dear Bassim. Thank you so much for accepting our invitation to join. What an amazing company you have created.
Thank you very much. Good to be here.
We are absolutely delighted to have you sharing your knowledge, know-how, experience with our global community that are now currently live with us. And definitely what you're doing is making such a big difference, especially in countries and regions when we have underbanked and people with less of access to financial services compared to other people in the world. So let's start with financial inclusion for a difference, because I mean, for a change, we always start with COVID. Now let's talk about general inclusion and how you see the industry evolving from that point of view.
Thanks, Doctor. Basically, before we start talking about the solution, we need to speak actually about the problem. And the problem is the complete lack of infrastructure in these emerging markets. And we like to refer to it as building a soft infrastructure. A lot of people today are seeing fintechs and technology businesses as disruptors. And We don't like to believe this. We like to believe that we're building bridges. We are building bridges to financial inclusion, to the underbanked and the underserved. And therefore, the problem started by simply having the issue of traditional banks do not want to bank people with little income. So people with, $100, $150, or people who want to borrow $50, $100, etc. The other side is, how do you reach these people? So you can reach them either with the web. So there's a lot of poor connectivity in many of the African and Asian countries and Middle Eastern countries for that. And the other side is via mobile. So using the traditional channels like SMS, USSD, and so on. So we obviously had to create solutions to reach these customers. But the second problem is, with someone with a very thin file where there was no historical data, how do you create data from someone that has never had a history, has never had a bank, has never used a credit card, has never had a transaction, basically a ghost that doesn't exist? So we had to develop these technologies, and we patented them globally to be able to use telco data, other social media data, and create scores for these customers. And then eventually the business started to grow drastically, and we reach almost 700 million people globally. Today, we do about 15 million transactions daily. So these are nano loans. These are small loans purely from airtime data, or cash loans up to, say, $30 or $40 across the world. So we're already there on the journey. We're leading in that. We are nowhere at the top. We're still right at the bottom of the pyramid. There's 1.7 billion unbanked population, and today we're serving something around 100 million regularly. So still a lot of potential for us to grow.
But still, what you're doing is basically building bridges for these people for their beautiful, better future. We know that people in the emerging and we call emerging markets in a very strange way around the world. But let's say that it's these worlds outside of the well-developed worlds are full of people who have to survive on a daily basis with $1 to $4 per day. Some of them, the luckier ones, go a little bit beyond that, let's say doubling their to $8 to $10, $15, $20 per day. But that's like very lucky ones. That obviously means they cannot travel, because you cannot afford even to buy a bicycle with $1 to $3 per day. So definitely you're giving them a new opportunity. So I think that in regards of the industry, we need to define whether you're disrupting or you are connecting. Which part are you of?
Well, let me put it in a very simple example. If you put a little cake with icing in front of a child, the child touches the icing and he eats that and he forgets about the cake. What we target is the cake, the core. And that's where the business is today. So the banks are targeting the icing, if you want to put it in that context, because in the icing is where all the money is. And at the bottom of the pyramid is where there's far less money. And that's our customer group. The people who are daily earners, weekly earners, traders, and so on. I'll give you a very simple example. Take a woman in Bangladesh that needs to buy textiles to sew clothes so she can sell and make $20 or $30 profit. She needs to borrow $50. To do that, the closest branch is 100 kilometers away. And she gets there, no one is even going to process an application for $100. We can do everything from A to Z within 10 seconds. She can have, because we pre-approve her and provide her with that loan. Now, our problem is not providing the loan now and scoring the customers. Our biggest problem today is the lack of understanding from regulators that they need to allow us to use more of this data to provide financial inclusion. So today we face these big challenges. We go visit central banks, we visit regulators, and we try to explain to them that if you want people to come onto the financial highway, you need to help us. You need to develop new laws. Your legacy laws, belong to the old era. You've not changed these laws. So can we work together? And some countries are receptive and they want to understand more, and we spend a lot of time educating them about it, protecting privacy, etc. And on the other part is, if you look at the emerging markets today in the Western world, if I ask someone to give me some data, personal data, they're very jittery. They don't really like to give that personal data and so on. But in the emerging markets, if I ask someone, could you take a picture of your ID, take a selfie, etc., because that'll provide you more score, they see that as an asset and they're more willing to give that, because they realize by giving that, they finally can get a loan. And that loan might be $50 or $100, but that's a lot of money when someone is earning $4 or $10 a day. And this is what we're trying to bring to the system. We've actually succeeded a lot in countries like Pakistan, Zambia, Uganda, Nigeria, and Ghana. And we're rolling this now. Every month we have new countries coming live.
You're doing a fantastic job. One last question before I would like to introduce another great panelist, and we can have this discussion going on together, because I believe that would be so many things to discuss together. But let's talk about COVID now. Finally, let's have this word said. How do you see the post-COVID era in fintech? Where do you see the fintech, the financial industry and financial technology industry developing?
I see it from different angles, actually, because before COVID, we were looking at some acquisitions. And what has happened is COVID has become a very big test for survival of fintechs as such, to see, can they survive this problem? Some did extremely well and some went out of business. So what's going to happen is either consolidation in the industry or collapse of a lot of the smaller players in the industry. Now, that might kill competition in many ways, which might not be good for the consumer, but it's too early to say that. But what I've started to see, and this is a positive trend, is that the big financial institution, the banks and so on, are starting for once to actually work with fintechs, because they realize they are the only conduit for the future. They are the only people that they can work with in order to deliver solutions to the masses. So there's going to be a cleanup in the next 3 to 4 months, assuming there is no second wave. We're not yet out of the first wave in many countries, but assuming there's no second wave and so on. It's good for the consumer over a long period of time. The short term, I'm not very sure, because a lot of these consumers are not conversant in the emerging markets. I can't speak much about the Western world and the impact there, because I don't have that experience, but I can say from the emerging markets, and with the adoption of smartphones and so on, it's going to take some time, but the traditional brick and mortar banks will start to close more and more. And take a perfect example, Microsoft closing 450 stores. There's a reason they did that, because they realized there's no need to have those stores anymore. They just need to have a virtual store, where today, speaking in virtual studios, it all looks like and seems we're all in the same place. Banking is going to be happening the same way, and fintech is going to be operating in this amazing ecosystem that was created as a result of COVID.
Bassim, thank you so much. Please stay with us. Let me introduce our second guest in the studio, because the topics that you just mentioned are so much into the area of competence that he can add to this discussion, knowing very well the Western world and also getting quite well and successfully into the banking sector. Let me introduce you my second guest.
Richard Davies is the Chief Executive Officer for Banking at Revolut. He is responsible for Revolut's banking entities around the world, alongside a number of group functions. Revolut is a radically better digital bank account that allows users to transfer, exchange, and spend money at a great value rates, with a multi-currency card that is accepted everywhere. The company is on a mission to build a fair and frictionless platform to use and manage money around the world.
Richard, such a pleasure to have you with us. Thanks for joining.
Thank you. Real pleasure to be here.
We already see almost 10,000 people with us live. That's crazy. That's how important is the topic that we are discussing now with Bassim first in the studio, and now having you with us. The same question, so we can make a bridge in regards to the content we create. How do you see the real impact over the fintech industry, and where do you see it post-COVID?
Yeah, so I think if we step back right to fintech is sort of part of the wider financial services ecosystem, and certainly if you look at the incumbents, I guess they've had really serious impact from COVID with branches closed or limited hours, call centers heavily impacted by staffing, unable to get to contact centers and so on. So wait times increasing, plus increased customer demand. So there's been like a real wave of impact there, which I think has led to acceleration of adoption of mobile, both for the incumbents and for the fintechs. So there's definitely been sort of, I guess, a boost to the existing trend to use of mobile. I think beyond that, you've also seen a boost to a lot of fintech businesses that do services like stock trading, cryptocurrency, where people have looked to speculate or invest as part of the crisis. We certainly saw that with Revolut, with a real acceleration in our own stock trading and crypto services in the last 3 months. And I guess you've also had for businesses or fintechs that serve generally in many countries, some degree of government loan scheme like the Paycheck Protection Program in the US or the Coronavirus Business Interruption Loan Scheme in the UK. And quite a lot of fintechs sort of getting access to those schemes and actually putting quite a lot of money out to support small business. So a pretty broad range, I guess, of how fintechs have been, I guess, getting involved in how behaviors have changed post-COVID. So yeah, I guess overall, I think the thing is quite a accelerant for fintech, albeit it definitely also sorts out, I guess, some of the players in terms of who may have had some hidden weaknesses. The kind of old Warren Buffett phrase about you kind of see who's swimming naked when the tide goes out, with people perhaps exposed on funding or reliance on some third-party suppliers that have had issues themselves. So a bit of a mixed bag, but overall I view it as quite a big accelerant.
I mean, Revolut is among the real innovators in the industry, I would say. You started so many things first. First of all, I really enjoyed the way it was created as an Apple platform. But then you really surprised the world by doing a lot of inclusive development, adding the portfolio of different type of currencies, and then crypto, and then adding more and more and more. So we've heard lately the rumors that PayPal is hiring crypto people. Obviously, the market expecting another player involving mass payments currently with crypto. We'll see how this develops, but overall, what is the fintech's unique advantage and skills, and how they really innovate to recover from what we see?
Yeah, I think I would generally characterize there's 3 advantages that fintechs bring. One is speed. So there's a sort of culture as well as a lack of legacy technology that allows for great speed in progressing things. And I guess some of what you quoted about Revolut, it reflects that, where we've launched a lot of different products and features. I mean, even during COVID itself, we've launched multiple products and features. I think the second one is data. The ability to have all of the data really accessible, not sort of siloed into legacy systems, as well as the skills within your workforce. So not just a specialist data analytics team, but data skills embedded throughout a fintech's workforce is a kind of key asset. And then I'd say both those things are then harnessed, you have to be harnessed around customer focus. So how do you really focus on customer experience and customer value creation? And I think if you can put those 3 ingredients together, so speed, data, and customer focus, then it naturally leads to ongoing innovation to produce features and products that customers really want. So I'm really confident that the fintech sort of boom that's existed, I'm sure there'll be a bit of a cycle of some consolidation, but I'm really confident that that fintech wave we're seeing, particularly over the last decade, will power us on in terms of innovation post the crisis.
Thank you so much for this. It really sounds like a great wrap up of the 4 real advantages the fintech companies are having. Some of them match with our industries, but there are some specifics here. But in regards of COVID, do you expect that we will see acceleration in towards the spread of these so many smart financial tools that we see around the world now, and coming more and more? Bassim mentioned that there were some new layers and others that are disappearing, new are coming, but still he mentioned that he sees more like consolidation of the business. On the other side, if there is an upscale in smart tools, this means that more new companies could come to the market. What is your take on that?
Yeah, I think both is true. So I think naturally we are sort of at the end of a wave of fintech growth and investment. And that sort of wave naturally always leads to consolidation around, certainly for the mass market, some players that are going to be large and sort of really break out. I guess you saw it with the sort of 90s leading up to the dot-com bubble bursting. But then clearly out of that has come like Facebook and Amazon and Google. And you kind of see the sort of real progression of some titans out of these sort of waves of growth and then crisis. So I definitely think we'll see that in fintech with consolidation of some of the smaller players. I think then trend-wise, I think we at Revolut are very focused around moving towards being a sort of super app, a place where you can have a full range of the key services you need financially as a retail customer or as a business customer. So having stock trading, having high yield savings accounts, having credit cards, having loans, having foreign exchange, all those services in one easy place. But also, I guess you extend that more widely, right? You think about players in Russia or China like Tinkoff or WeChat who've gone well beyond financial services into integration of taxi, restaurant, all sorts of services that you need for your life. So I think that sort of consolidation is also a trend for sort of major mass market services. And there's people approaching it from different directions. People approaching it from the fintech angle, people approaching it from the tech angle. And I think that can only help to really improve customers' lives by defragmenting the sort of pretty messy experience they often have of having many, many different apps, some offline experiences, some offline services, and sort of generally trying to bring it all together in their head and it all being quite a poor experience. But I think there'll still be a room for specialist players who are very, very focused on a particular area, niche, that they can just really do better than anyone else. So I think you're going to see both trends, right? The sort of the mass market, global fintech, as well as the continuation of very successful specialist players.
I would like to bring you now together with Bassim to the studio and to have you answering 2 very provocative questions, I would say, but they're not provocative for the people from the industry, but most probably for the wider audience, even though the WEBIT wonderful community is a top-notch global leadership network who are more into defining the trends rather than just listening to what we say. So I would like to get involved with that community now. So 2 questions. First one is already on our website and you heard it. Are the banknotes that? Is it the end of the banknotes as we know them for the past 150 years? And then the second question for both of you to get prepared is, after 600 years of 600 plus years of banking, do we see the end of the banks as we know them? Because obviously we talk about new level of services, new level of interaction, a new type of needs that you both with representing Bassim, representing the business where he banks unbanked and gives them loans, which normally the banks were doing, and Revolut providing platform for payments, one-to-one, one-to-many, traders, etc. So isn't it kind of the end of that era of the banks? So let me go back to Bassim for having his take on the first question about the banknotes, and then please feel free to jump in. We're only the three of us now in the studio. Bassim, what is your take on that?
Well, look, I think in the emerging markets, cash is king. And I can tell you, it's going to be there for a very, very long time to come. A lot of the governments have tried to make a cashless society. Of course, there's some prestige with being able to pay through an app or having a debit card and so on, but cash is king. Because take an example, I mean, a country like Nigeria, 190 million people, you've got less than 5,000 bank branches. You can't possibly serve. I mean, you've got 5,000 bank branches in a street in London, for example. So there's really no comparison here. But here's the interesting thing, which I think is the most provocative thing here. As Western economies print more money to pay for the debt, the big question remains is, they keep printing that cash. Where's that cash going to end up in? And how is that cash being supported? So do these governments want to end the cash cycle now that they have to print to pay for their debt, be it the US or England or the European Union? So this is I think this is something we're going to see very soon when we measure inflation and start to think whether really this is the end of cash, because it's the only tool left. There's no gold left, so cash is the only tool to prop up these economies.
Richard?
Yeah, I think, well, certainly in Western markets, COVID will drive significant change. I mean, I just think about myself personally. I haven't used a banknote since early March. And like, I wasn't a huge cash user, but that's still quite a significant.
What is the reason? Is it Revolut the reason for you, or it's more hygienic reasons?
No, listen, I think partly I was fairly electronic anyway, but with the shutdown of physical shops, I mean, you clearly can't pay cash for e-commerce very easily. And then, yes, a lot of shops in London also sort of, for hygienic reasons, moved to card-only transactions when they did reopen. So I think that will significantly accelerate the trend of reduction in cash. But I think there are still groups, even in a market like the UK, where they still very much prefer cash, and often more vulnerable groups. So I'm not sure I see it disappearing fully, but I definitely see yet another step change away from the use of cash on the back of this. And I think things like the contactless limit being raised in Europe will help that as well, because you've got more transactions that qualify under the contactless payment, which is clearly very convenient.
But do you think that countries like, for example, Norway and now Sweden, they're moving into the cashless? Now even we see in Germany, which used to be the bastion for, it's like the fortress of the cash payments in Europe. Now they move away. They kind of, people started using more and more cards and of course services that are obviously cashless. So do you think that countries who give up cash will develop faster economies and more effective economies and economic connections compared to those who still use cash? Would that bring a new frontier of digital divide? This question is for both of you, by the way, so you just take it.
Yeah, let me go first. I think it's a great question. Hard to completely guess, but yeah, I think certainly within countries, you have got segments, a bit like myself, that have gone pretty much purely cashless, and you have got some degree of digital divide within a country. But also clearly, if countries move fully cashless, it will create that reinforcement. And I guess some of the countries you mentioned have been more advanced than some other countries around things like digital identity. And I think often digital identity goes hand in hand with wider digital progression in an economy. So I think there's definitely something about how countries put together the whole sort of step change of use of digital infrastructure, and with digital identity at the core of that is over a decade looking forward, is going to be a huge determinant for me of their economic progress. I mean, I think also to touch on a related dimension, if you think about financial crime and economic crime, then moving away from cash and establishing central digital identity is a massive boost to that, where there's currently very high levels of money laundering and fraud that goes on, sadly, in an economy like the UK and many other countries around the world. And yeah, if you've got a really good digital identity system and you move away from cash, you have so much more traceability around transactions. So I definitely think there's huge benefits in this sort of move. Just kind of need to watch out for that divide around the more vulnerable in society.
I agree,
Bassim,
and I
what
think.
do you think?
No, look. The issue for me is the following. Okay, I mean, I've been to maybe 42 African countries, and I've traveled across Asia and all of that, and I've actually gone into territories where people use a lot of cash to try and understand why is it that they use this, and so on and so forth. There's a few things that we cannot ignore. People don't trust the banks to start with. So they still use cash and put it under the mattress. This still happens today very much in all the emerging markets. Now, if there's more confidence in the banks, people perhaps might still want to go a bit cashless, but it's not going to happen very, very quickly. The second thing is taxation. People don't understand taxation and in a lot of these markets because they've never really paid tax. And as long as there's a ceiling where if they go digital, they're not going to be taxed on the little income that they make, and I hope they never do because this is so much little money that they can hardly live on, then that will encourage the people. And the third thing we need to look at is how much are the fees that they will pay. Today, remember, when they pay cash, they pay 0 fees. So it's working within cells and within communities where that cash is moving around and there's no fees being exchanged. If I need to move cash now across a territory, across a country, across a state, I need to make sure that if I put 100, the person there is going to receive 98. He's not going to receive 80. So if the government, again, it comes back to my discussion right at the beginning of this, is that cash is always going to remain in these emerging markets to ensure people are encouraged and not concerned about the banks.
Thank you so much, Bassim. And then since you have almost answered the question, my second question in this part was, do we see the end of the banks as we know them for the past 600 years?
I do not think so. I do not think so. Banks are still the pillars of the financial industry, no matter which way. Where their business model change, perhaps, is there going to be more focus on digital lending and so on? Yes. Is going to be more virtual banking? Yes. I mean, if you look at Goldman Sachs, JP Morgan's, they've all now creating subsidiaries that are focused purely on fintech and digital banking and so on. So banking will remain. It's just the definition of banking will change. That's the difference. These guys will still need the big balance sheets. They're still going to be the custodian of a lot of cash of the consumers and governments and sort of. So it's just, I believe their business model will change, but they're definitely going to be there for at least the well foreseeable future.
Richard?
Yeah, I agree. I think listen, Revolut is a bank in Eastern Europe right now, and it's applying to be a bank in at least 2 other markets right now. So there's something around sort of the degree of customer trust that comes with the sort of government regulation that comes with being a bank, plus the ability to sort of use your customers' deposits to lend. It can be a massive thing. I think the battle is particularly one for the custom interface, which I think is a battle that the incumbent banks have been losing in recent years. And I think that battle is intensifying with the likes of Apple coming in with a card, Amazon partnering with Goldman on small business lending. And yeah, I guess you see more of that sort of incumbent banks sitting underneath somebody else as the customer experience layer. But the advantage that a Goldman or I think it was JPM or Citi who did it with Apple, I forget, anyway, they've got a balance sheet, the low cost of capital, the low cost of funds that allows for that provision of lending products at very low cost to prime customers. Yeah, I think you might see some more separation of that, the customer interface layer versus the balance sheet. But yeah, banks aren't going away.
Thank you so much, Richard. Now, with your permission, gentlemen, I would like to move ahead. We are now having someone with us who is representing over 20 years of experience. And regardless of her young look, she brings a wealth of knowledge in journalism. In regards to our next guest, I would like first to introduce her, and then I will bring her to the discussion so we can have a wider point of view and herself representing Forbes to ask more questions from our audience. Let me remind our audience that #WEBIT is always giving you a ticket to our live sessions, and you can ask your questions and get answers from the top global experts that we are hosting. Let me introduce you my next guest in the studio.
Angela Antetomaso is a TV presenter and journalist with more than 20 years of experience. Her broadcasting career started in New York at CNN and then at Bloomberg Television. After a few years, she moved to CNBC in London, working as a presenter for Class CNBC and also hosting her own daily talk show. Angela now lives between London and New York, working as a correspondent at Forbes Italy.
Hello, dear Angela. Such a pleasure to have you with us.
Such an honor being here. Lovely to see you again, and lovely to meet actually.
We'll be seeing each
Bassim
other this week.
Richard. Thank you for having me here.
No, I'm grateful, and so we will be seeing you this week again. You're joining the FinTech Week both as a co-host here with me today and as part of our leading media panel on Thursday. So thank you so much for joining. You are listening this fantastic discussion with Richard and Bassim. I would love you to jump into it and get to the questions, both from you and from the audience. I remind #WEBIT, more and more questions to be received. So I'm leaving the floor to you now, dear Angela. So let's see how you're going to bring this discussion further.
Thank you so much, Plamen. You've been so good that I cannot do any better. I want to tell you, okay? But from this discussion, I had really lots of questions that came. Sorry, and probably 20 minutes are not enough. But one of the main things I would like to ask is, we've been speaking about consolidation. What's really happening now when it comes to this? Do you think it will be the big traditional banks that are going to acquire the smaller or medium-sized fintech because they need their technology? Or do you think that can also be kind of consolidation between two fintechs, kind of medium-sized fintechs, for example, or smaller fintechs? The question here, the real question here is, big banks have got access to funding, direct access to funding, obviously, but smaller fintechs not always do. And one of the problems now is exactly this, fundings. What do you think is going to happen? In the last quarter, funding for fintechs was actually having a big fall, about 45%. So this means that there are some risk as well.
Thank you, Angela. We have issues with the picture that comes from you, but we hear you clearly well.
I'm happy to jump in. So I think it's a bit of both. I'm pretty sure you will see the large banks, venture arms active in looking at trying to buy some fintechs. I mean, that's not a new thing. That was happening pre the crisis, but they may well try and be opportunistic with the crisis. And certainly you'll see, I guess, some of the mid or larger size fintechs, the well-funded, looking at opportunities to buy fintechs that give them additional capabilities. So it could be, for example, new geography, could be new complementary product line. I think that's pretty natural state of affairs. But you're right, the funding is the key here. So you can do acquisitions for paper, clearly, i.e. shares only, but you still need the cash to afford the burn that lies with most fintechs, i.e. most aren't profitable right now. So if you add an extra fintech to your burn rate, then you need to have the cash to afford that.
Thank you, Richard.
And I hope you
Bassim,
can see me.
We lost the sound. Bassim, do you hear me?
Yes, I hear well.
Perfect. So what would be your take on that question from Angela while we were hearing her?
You know, there's a nice saying. They say, as you go deeper, the sharks become bigger. So as there's more money in fintech, the big banks are not going to sit and just watch those sharks pass by and not try to take them over. So I can see it already. I can see a lot of interest. Actually, we've been approached even in the last 2 months by some major big financial institutions to talk to us. Actually, what's our interest, what is our strategy, how can we align, etc. And I know of several other companies that have been the same. The reason is the banks today in their form cannot create what the economies are demanding from them in terms of digital and financial inclusion. The only way they can do it is by acquisition. And of course, they will buy, there will be some failures, but there'll also be some great unicorns that they will buy along the way. And obviously, I'm not sure about brick and mortar banks merging as much today, because I think a lot of them have been beefed up and run with very big balance sheets. But definitely in the fintech space, I see this consolidation coming.
Great. Do we have Angela back with us?
I just hope you can hear me.
Super. Yes, we do.
Tell me if you can see me and can you hear me? Okay, that's fantastic. And I'm so sorry about this. I need to upgrade my technology as well, you see, which I just did. But obviously, we still have issues. But one of the other questions was we or every company needs to upgrade now their technology. And, you know, the way to do it would be through consolidation, we said. But this also... you know, there is another problem. It brings another problem, which is cyber attacks, for example. I mean, there has been a huge spike, about something like 300% in the last few months. So another big issue here is security. How do you deal yourself with security in this kind of world? Also because you are, very spread out. You're just in several countries. You're not just in one area of the world.
Yeah, I mean, I think there's probably more fraud in the traditional banking than there is in the fintech. I'd like to see some.
That's very interesting.
I'd like to see some data on that, because I can tell you, when we build technologies, we build them extremely secure. But it's very easy to hack a credit card on an ATM and steal money from someone's account. So that's a big difference. So I think probably it's far more secure with the level of encryption that is available today, with the double opt-in, with confirmation of SMS, etc. It's very difficult today for someone to really steal money easily. I think the traditional banks are the ones that have to worry about, unless the fintechs.
Yeah, listen, I mean, it's a really important matter. I think there's fraud, and I agree there around, I mean, give an example, we, as part of our KYC process, we take a selfie of a customer to compare to the ID they supply. We then use that selfie to, if they're doing certain transaction types, to authenticate them as part of just the natural flow to help prevent against things like account takeover fraud, where someone tricks into basically switching the device, the SIM, to a new mobile. Very hard to then have the sort of the live selfie of someone. Much easier to intercept the SMS code or something. So I think fraud techniques. I think everyone's getting better, but definitely fintechs often doing pretty well on that. I think then more broadly, there's the whole sort of space of cybersecurity, which I don't pretend to be an expert in, but it's something you just got to invest massively in as your company. So we have a dedicated chief information security officer, and it's all about, I guess, your code practices as you are developing software, as well as ongoing penetration testing, bug bounties, kind of the full works that allows you to try and identify vulnerabilities early, ideally internally, but if not externally, and get them fixed ASAP. So I just think, you never want to say you're completely foolproof, because I guess many companies have seen the problems of that, and there's lots of bad actors out there who are quite sophisticated. But it's certainly something we take very seriously at Revolut.
It's if you look from that perspective, sorry, Angela, just to add that value here, if possible, in regards of both statements that now technology is more secure than the traditional way of exchanging value. We see more and more AI threats coming out there. So of course you're players in the fintech industry, and it makes sense that you make these statements. And I'm sure that it's a very credible and a lot of work and technology that stays behind what you say. But at the end of the day, we see AI getting more and more into whatever you think of. And if you think about the trust in the banks, still very tangible, being able to be touched. And from the point of view of these people who are now even underbanked and have no trust in anyone, do you think that this transition to digital will be basically, we see what M-Pesa is doing in Africa, right? So we already see people using technology in all these emerging places. But do you think that we will see a jump, and this is particularly for Bassim here, a jump in the technology adoption, fintech technology adoption in all these emerging markets now, when almost, I think still the adoption of mobile phones in Africa is quite high already. Middle East, not to talk about, it's a huge. So do you see like very quick step?
So it's an interesting question, because I actually sat down with the Kenyan finance minister and I asked him, what is it in your opinion that has made M-Pesa take off? And his answer was actually very interesting. He said, we didn't understand what they were doing. We didn't regulate them. And then 5, 7 years, 8 years down the road, we realized, oh, this is something interesting. And we decided, how can we support them? The difference with the countries outside Uganda, Zambia, and that Eastern African bloc is that in Nigeria, the traditional banks obstructed mobile money with the telcos and obstructed an infrastructure because they saw it as a threat. Do you know that they only issued licenses in January of this year for mobile money?
We've heard from a number of places, and we were going to be discussing this as part of the Policy Innovation Summit, that basically Kenya was the one that really supported regulate the business with Vodafone and building this huge empire there. So the Nigeria obviously is the opposite of it. Angela, back to you again.
Yes, now this is also very interesting what we were saying. So do you think that the way we will see fintech developing and possibly booming, because there is a good chance we will see a big boom as well with all the risks that we talked about, but do you think that this will depend also on geographical areas? For example, it will be different in Africa, in Asia, in Europe, in the US. What is your take on this? Actually, I would like to hear from both of you on that, please.
I think
I got disconnected. I'm not sure if I'm back. You can hear me, or
Yeah. Go ahead.
Right. So let me go. I think, listen, there are big differences in terms of current state, what the sort of context is of the problems you're trying to solve, and cultural differences. I mean, if you think about China and why have Alipay and WeChat done so well, I mean, I guess there was a big problem to solve. There was low adoption of cards to start with, or low provision of cards to start with. Banking was concentrated on the 20%, leaving it 80% ignored. And that allowed Ali and WeChat to really jump and really progress things for Chinese populations. And they're well ahead of most Western financial services. Whereas change in Western Europe's probably been more incremental, and I'll argue change in the US has been behind Western Europe. I think therefore you've got to be pretty conscious of those different geographic contexts around what are the customer's problems you're trying to solve. But I mean, there are problems that need to be solved internationally. That's certainly something Revolut feels quite passionate about, where cross-border payments, for example, they take big chunks out of the money you send across the fees and the foreign exchange rates, and they're slow when they go via the SWIFT network. And so there's certainly a network effect of being in many countries, and that's something Revolut's quite passionate about, that if you're in Singapore, Australia, US, Latvia, Spain, you're able to do peer-to-peer transfers that are instant and free. It is a big thing. So yeah, I think it's all about coming back to the customer and what are the problems you're going to solve for the customer, while kind of recognizing the geographic differences.
Bassim, what's your take?
look,
I would like to hear from Bassim about that, please.
Is, again, I mean, the model Revolut use. I'm a Revolut user, by the way, and it's I really enjoy going through it and understanding how they think. I try to understand more about this, but then I try to apply it to the markets where I operate, and I could see already the difficulty there, simply because there's a lack of adoption of digital in general. And coming back to the initial discussion I was saying, is that we're going to see little pockets geographically. We cannot say in Asia we're going to have a boom in this. We're not going to say in Eastern Europe we're going to have a boom of that. I think it's going to come down to individual countries, and then from individual countries it will start to expand into the regions around it. Kenya was the driver for the Eastern African bloc in general. Ghana is probably going to be the drive for all the Franco-African and Anglo-African countries. But there's some countries that even like digital or mobile wallet doesn't even exist, is not even on the radar, and we still see that today. So we're still in the very, very early stages.
And if I
just
can ask,
to remind you, Angela, we only have 5 minutes left.
And exactly, and then just one last question, and then I will leave it to you, Plamen, actually. So just a brief answer about what's the difference between the big crisis, the Greek crisis of 2008, and now for fintech. They did very well at the time because trust and confidence in traditional banking was not there anymore, but the banks were intervening and they were printing money. Now it's a completely different story, as we said at the beginning of this conversation. Bassim, can you give me your take?
Yeah, I think the big difference is the largest deposits, I believe, ever in banks have been recorded in the last 3 months. During the financial crisis, it was the other way around. So if we, and when there's a lot of money in the banking system and the deposits, obviously people are saving, and eventually people might, use digital to spend, because obviously they couldn't go to shops. Richard mentioned earlier he hasn't used cash or hasn't maybe spent much since. We all haven't spent. We've all just maybe sat down a bit of money here and there, and we don't spend. And that's the big difference between 2008 and now. Fintech was still in its primary phases at the time, so we can't really measure the impact because it's 12 years ago. And in the fintech and digital world, 12 years ago is equivalent to 200 years of banking, because that's how fast this fintech progresses. It would be interesting to ask that question maybe in 5 years from now, when fintechs have really gotten to a level where we can measure against what we've done over the last.
Bassim, we're losing you, but knowing where you are in the world, it's great that we have you in general.
I'm back now, am I not?
Thank you. Welcome back.
Wow. Can I just ask, since we have really a few minutes, the same question actually to Richard compared to what it was in 2008 and now, and you have been in banking, traditional banking before joining Revolut. So I'm sure that you had your own personal experience of the great crisis, not necessarily in fintech, but in banking. So, really very close.
So I was at Barclays at the time of the GFC. I mean, it's different, very different. I think that was a financial crisis. You had major global banks failing, and no one trusting each other at all around the web of financial infrastructure that underpins all our economies. So it had the potential to go to a really bad place, but actually the aftermath was serious. But in some ways, the COVID economic impact already been dramatically greater than the GFC, the real world economic impact, because I mean, you've seen countries see GDP drops in a month of 15%, of 20%. I mean, this is like many years of economic growth. I mean, I think in the UK it was 18 years of economic growth was wiped out in 1 month. So that's actually much worse impact than the GFC on the real world economy. The big question is how much it recovers from there. But the thing I'm very optimistic, and the GFC spurred innovation. It kind of was the birth of this wave of fintech, and I'm pretty certain that the COVID crisis will be the birth, not just for fintech, because the GFC was a financial crisis, but this is kind of a full economy crisis. I think it'll be a birth of a lot of positive innovation for the next 5 years.
It's always good to wrap up in a positive mood, and knowing the challenges ahead of us. I prefer, Angela, if that's okay for you, to see this world through our pink glasses while getting ready. We know that only the paranoid survive. Getting ready for what is coming up next, and definitely it will be more financial services provided through digital means, and definitely having more and more solutions of its growing digital type, rather than the old ways that we were served by the banks for hundreds of years. So it's a great time to be in the fintech industry, regardless of what we started with, that the gold age of funding and investing is somewhere at the plateau. We still see more opportunities in Europe. We know that with the new legislative framework, more and more players are jumping in. We see more and more companies playing a major role in the future of the industry. We will be talking about how Alibaba and Amazon and Airbnb became and are becoming stronger players on the banking sector and others. So let's stop here. I'm very grateful to all of you for joining us from all around the world. Special gratitude to my fantastic guests here in the studio. I would like to urge you all to jump in tomorrow back to WEBIT Virtual, when we shall be hosting fantastic companies. Bassim, one of the companies are doing peers of yours, of course, at very young age. They just started. We have another one called MoneyClick. We have QP, which is working together with Apple and Google now on making the selection of the right payment instrument at the right time, financial, of course, feasible. And we have Nemuru, who are providing services for large and medium and small retailers. All of them tomorrow will be pitching in front of 5 investors, some good friends coming back to the WEBIT Virtual jury, and we will be selecting one of these 3 to join the Founders Games, the world's biggest startup challenge exhibition area at WEBIT, and pitching for the $1 million award by WEBIT and our partners. And of course, coming up next on Thursday will be the media panel, the leading media panel, when Angela is joining us back, along with participants from Mashable. We have also great representation of global media. You will hear a lot of news coming up next. Until then, I will be seeing you in 22 hours, 56 minutes, and 50 seconds. Thank you so much. Just 1 second for the votes. We had a very interesting vote here, and we see people divided. We have around 1,220 people saying yes, that's the end of the banknotes. And we have 1,300 people saying no, this is not the end of the banknotes. So I guess it is all about to see. See you tomorrow. Bye-bye.
Thank you.
This program is powered by thevirtual.show,